It's extremely inspiring to hear you all talk so much about the SDGs. I love them, and I always talk about them as a common language. And from what I've heard here today, it really illustrates the fact that they are a common language. Each one of us sitting in this room can and must do something, because this is not somebody else's problem or challenge. We all must unite here. So I could talk about the SDGs for a long time, but this time I'd like to take this opportunity to reflect a bit on sustainable bonds, green and others, and how to assess the quality of them and how to report everything of this from an investor perspective. AP2 is a Swedish pension fund managing 35 billion euros all over the world, and we try to integrate sustainability in all of our work. And I think that green bonds is a great example of a sustainable product leading the way for other new products, like using the core for development, as Nikki Newton-King just spoke about. And I also think that they are a way of leading a way to new knowledge, not to be forgotten. We were one of the first to invest in green bonds 10 years ago, and we have continued since then, and we've seen the demand constantly growing, and green bonds are now part of our own strategic asset allocation, and we are invested in over 1,300 projects in 96 countries. And that kind of investing has had many advantages for us. It has helped us to learn more on environmental issues within the organization, and through the increased transparency from companies that issue green bonds, we have been able to get to know them better, to get under their skin, so to say, and through that being able to analyze them in a better way. And what we have learned during these 10 years is to better assess the quality of the projects, of the bonds that the bonds are financing. As an asset class has become extremely popular or increasingly popular. Less serious issuers have been attracted, of course, to the market, which has led us to saying no thank you to quite a lot of cases, because we don't buy the green story. And there I think that a number of stakeholders have a role to play before letting issuers come to the market. Stock exchanges are one, regulators, banks are others, and we know that this is an issue on the table at the EU right now as well. But I do hope for the same journey to happen for the social bond market, and we're invested there as well, but that hasn't quite taken off yet. And I think the potential for the social bonds is much higher, actually, because there are so many projects that could be financed this way, not the least linked to the Sustainable Development Goals. And social bonds are often a great practical example of cooperation between pan-governmental organizations like the IFC and public and private money. But we have one challenge for the market, to conclude here. If the market is to grow, we need to, of course, know how to assess the quality of the projects and how to report on the impact. I'm honestly both glad and also a bit worried about the many initiatives on reporting impact right now that we have seen. And I do hope that different stakeholders together can agree on some kind of reasonable first standard going forward. Even if Tim Owen from the GRI says that they are the IFRS on ESG, it doesn't look like all the market is agreeing on that. So I think it's important that the stock exchanges continue to engage in these important issues, helping to establish a consistent standard, as the Secretary General of IOSCO previously spoke about. If not, I'm afraid that we will see less investments in important projects if investors are awaiting the perfect way to measure impact before they start investing. This is a new and different product, but we are also living in a new and different world. So maybe we can ensure the content of these projects, start investing and develop the exact details of measurements underway. Or maybe there already is a standard. Thank you.